Roxham TV, and thanks for sticking around with us. We have got a big show today, and this is one of those episodes where the stories may look very different on the surface, but underneath, they are all connected by the same thing, which is control. Whether it's control of shipping routes, control of money, control of technology, or control of resources, or control over the choice people are allowed to make. So today's show is really about who controls power right now and who is trying to take more of it. And that's why you want to stay all the way through till the end. First, we'll start with one of the wildest stories coming out of the Middle East yet again. So there's a crypto scam inside a war zone. Scammers are pretending to offer a safe passage through the Strait of Hormuz if shipping companies pay in Bitcoin or USDT. And this is not just some random online fraud. At least one ship reportedly believed it, paid the money, and still got fired upon. So we are going to break down how the scam works, why it sounds so believable, and why this is a warning about a new kind of risk where geopolitics, sanctions, crypto, and chaos all come together. Because in uncertain environments like this, bad information can become just as dangerous as the conflict itself. Then we stay in crypto, but shift to a very different question. Who is buying all the crypto right now? Well, and Bitcoin, and where is that money even coming from? Because while a lot of people say the market feels really slow, really boring, companies like MicroStrategy and BitMine are doing the exact opposite. They are buying aggressively. We are talking about billions of dollars of Bitcoin, hundreds of thousands of Ethereum. So we are going to break down how MicroStrategy is using STLC to keep funding Bitcoin purchases, how BitMine is using both equity financing and staking income to build a giant Ethereum position, and why this matters for supply, market structure, and long-term price dynamics. Because once these companies build machines that can keep buying, the question stops being, will they buy more? The question becomes, how much can they actually own? After that, we will move to big tech. And this is one of the biggest leadership stories of the year. Tim Cook is stepping down as the CEO of Apple. This is the end of a major era we're talking about. He took control after Steve Jobs during one of the most uncertain moments in Apple's history and turned that company into a $4 trillion giant. Now, John Turners is taking over. So we are going to talk about what Tim Cook's legacy really is, who John Turners is, why Apple chose continuity over disruption, and what this means for the next phase of one of the most important companies in the world. Because any change at the top of Apple matters far beyond Apple itself. Then we move to the UK, and this is going to be a very controversial one. The UK has now passed a law that bans anyone born after 2008 from ever legally buying cigarettes. So, not at the age of 18, not at 30, not ever at all. Now, to be clear, this is not about whether smoking is healthy, because we know that it's not. The deeper issue is freedom. How far should government go in controlling behavior? And at what point does public health policy become something broader, something more than more about control than education? We'll also zoom out and compare to that a bigger issue. While the UK is making headlines for restrictions for buying cigarettes, markets like Taiwan are moving ahead on innovation, semiconductors, and also AI. So this is not just a smoking story. This is a direction story. And speaking of the UK, we'll also cover another very interesting trend. For years, wealthy British people, so the wealthy Brits, founders, finance professionals moved to Dubai for low taxes, better lifestyle maybe, and more money in the pocket. Now, some of them are leaving. Well, the reason is because war risk in the region is changing that calculation. So we're going to break down why thousands of British residents have reportedly left the UAE and why the UK is trying to pitch itself as a safe harbor again, and why many people still may not go back to the UK. Because in today's world, wealth doesn't just stay still, it moves really fast. And when safety taxes, lifestyle all start shifting at once, that movement can happen very fast. Then we get into something very strategic. A brand new rare earth ETF has launched. And what makes this interesting is that it excludes China completely. That may sound like a very niche story, but it is not, because China dominates rare earth mining, processing, and magnets, especially the heavy rare earth side. And that means this ETF is not just an investment product, it is a geopolitical statement, a bet that the West will spend heavily, subsidize domestic champions, and try to build a supply chain outside of China. So we'll explain why this matters, why rare earths are so important to EVs, semiconductors, defense, AI hardware, and why this ETF is really about the long-term battle for industrial power, and it is worth to maybe invest a little bit in that ETF. So if we zoom out, today's show is really about something bigger than headlines. It's about systems under pressure, shipping routes under pressure, a supply chain under pressure, and markets trying to price all of that at once. And when all of that happens together, the world can change faster than people expect. And that's why these stories matter today. Not just because they're interesting, but because they tell you where the power is moving. All right, so we have a lot to get into. Let's get straight into it, because we begin with one of the strangest and most disturbing stories in the global markets right now. So there is a crypto scam in the middle of a war zone, and why fake safe passage, the message in the Strait of Hormuz are creating a whole new kind of risk. So let's break it down. Like here, this story is actually mixing with geopolitical conflict, supply chain disruption, and also crypto. And of course, you're going to get a new type of scam. So, what just happened is that right now, tensions around the Strait of Hormuz is, of course, still very high. Like shipping routes are disrupted. Oil tankers, right here, they're still stuck, and uncertainty is everywhere. And in the middle of all of this, scammers actually stepped in, pretending to be Iranian authorities and offering what they call the safe passage. So here's how the scam works. Very simply, actually. So shipping companies receive a message, and the message would say, like, if you want to safely pass through the strait, you need to pay a fee, not in cash, not through banks, but in crypto, specifically Bitcoin or USDT. And once you pay that money, you supposedly get a safe passage clearance. Now, this is not just a normal scam, because this is happening in war zone where there are real threats, real military activity, and real consequences. So companies are already under a lot of pressure, and that's exactly why this scam works. Here's the part that makes the story very serious. Like, at least one ship actually believed that message. They paid that money. They thought they were safe. And then when they tried to pass the strait, they were fired upon. So this is not just about losing money. This is a fake signal leading to a real world decision and ending in real danger we're talking about. That's completely different level of risk. Now, if we zoom out, like why would anyone believe a scam like this? It should be really easy to identify, right? Well, because not gonna lie, there's so much confusion in the market, and there was some truth around the crypto being used in the Strait of Hormuz. Because earlier this month, Iranian officials actually discussed the idea of maybe charging transit fees in crypto. There were real conversations about using Bitcoin, using alternative payment systems to bypass sanctions. So when scammers send these messages, they sound very believable. And this is what makes the setup so dangerous. You have real geopolitical tension, you have real policy discussions, but no clear communication, and that creates the perfect environment for scams. Right now, the strait is effectively still very much disrupted. Reports suggest like tens of thousands of vessels, including oil tankers, are stuck in the region. So ship operators are feeling very desperate. They are looking for any solution at all, like any signal, any way through. And that's when mistakes happen. Now, let's talk about the crypto angle. So why using Bitcoin or maybe USDT, you might ask? Well, that's because crypto is fast and doesn't require banks. And in a sanctioned environment, that makes it the perfect tool for both legitimate workarounds and also scammers. This is where things gets very interesting, right? Because crypto itself is neutral, it's just a tool. But in this case, it is being used as part of a deception system to create urgency, to bypass verification and move money very quickly. And this is something we need to pay attention to because this is not just a typical phishing scam. This is a geopolitical scam where global events are being used to manipulate behavior. As conflicts increase and systems become more complex, we are going to see more of this. More scams that look really real, more scams that are tied to actual events, and more scams that push people into fast decisions. So I would say the biggest takeaway for this news is that we are in a very uncertain environment. Information becomes very dangerous because like not all signals are real, and reacting too quickly can actually be more dangerous than doing nothing. So of course, we'll keep tracking the developments of Strait of Hormuz on Roxim TV. So speaking of crypto and also Bitcoin, I do want to dive into the market right now because while most people are saying, the market is so boring, it's not moving, nothing is happening, there are two companies doing the exact opposite. So the first company we have to talk about is, of course, MicroStrategy, and the second one being BitMine. They are buying aggressively. And the question is, where is that money coming from? Like, how the hell can Michael Saylor buy Bitcoin with? We're talking about billions of dollars of purchase. So let's actually look at the number first. So Michael Saylor's company, MicroStrategy or Strategy, uh, they just bought 34,000 BTC in 1 week and spent about $2.5 billion. And the total holding of the BTC is 815,000 BTC on the balance sheet. At the same time, another company I do want to spend some time and look into today is BitMine, because they bought over 100,000 Ethereum, now holds nearly 5 million Ethereum. So even in a weak market, in a bear market, these two companies are accumulating like crazy. So let's actually start with MicroStrategy first. So Michael Saylor is making very bold call. He happens to believe that 2026 might be the last year you can buy Bitcoin under 100K. So from his perspective, every purchase now is still very early. And here's where it gets interesting. So Michael's strategy is buying Bitcoin faster than the new Bitcoin is even being created. So what happens when it comes to the price action, right? So imagine this, like supply on the market shrinks. And as supply shrinks, scarcity increases. So the more they buy, the tighter the market becomes. But the main question everyone is asking, how do they keep buying billions of dollars worth of Bitcoin? Where is that money coming from? So let's talk about MicroStrategy first. And one of the weapon they have for MicroStrategy for Michael Saylor is STLC. And Michael Saylor himself, he has been shilling STLC, this financial product of the company, nonstop on all the social media or all the platforms you can find. So STLC, this is a key financing tool for MicroStrategy. It is actually a preferred stock. So how it works is that investors would buy STLC, they would receive a very high dividend. So we're talking about 11.5%. MicroStrategy would then take that money to buy that Bitcoin. So if you guys are interested how it works, STLC is always trading around $100. If it goes up more than $100 or below $100, they would change the yield. That would basically a balance in the market. So that is STLC. If you guys are interested in buying some STLC with your Bitcoin, you can also done so on Roxon Exchange. So instead of using their own cash for MicroStrategy, they are raising capital from the market. Like because STLC offer really high yield, so 11.5%, that is really juicy yield. They have exposure to Bitcoin, of course, and relatively stable income. So it attracts a very specific type of investor, people who want yield but still believe in Bitcoin long term. So the result is, if we take a look at the chart here, STLC actually funded over 85% of the latest Bitcoin purchase. That's more than $2 billion in 1 week. So MicroStrategy has basically created a machine that converts investor demand into Bitcoin accumulation. However, there's a catch though. Like some of the demand is coming from dividend arbitrage traders. So they buy before the payout, they will collect the dividend, and then they will sell very quickly. So not all of them are long-term believers, but like some of them, at the very least, they are using it as a short-term strategy. So that is for STLC. And right now, let's talk about another giant, which is BitMine. And they are, of course, instead of buying Bitcoin, they are buying Ethereum. And the strategy is slightly different. And I do want to spend some time to dive into that because, like, I feel like there's some confusion out there on X. So what BitMine is viewing Ethereum, why Tom Lee himself is so bullish on Ethereum, is that they happen to think the mini crypto winter, so-called mini, they think the crypto winter is ending, and Ethereum is starting to outperform yet again. They also believe that Ethereum would benefit from two biggest trends. So the first one is tokenization. So tokenization of assets, maybe bonds, basically all the RWA out there. And the second biggest trend is AI systems using blockchain, so using the Ethereum chain. So in their view, from BitMine's view, Ethereum is not just a coin, it is an infrastructure. So right now, BitMine holds over 4% of the total Ethereum supply. So now think about that. Like one company controls a very meaningful portion of the network. Now, here's the key difference from MicroStrategy, because like as I mentioned, MicroStrategy is using STLC right now at this stage to make a billions of dollars of Bitcoin purchase. But BitMine used two main other sources. So the first one is equity financing. The second one is staking income. So let's talk about the first one first. So for equity financing, what does it mean, right? So basically, they would issue new shares. They raise money from investors and use that capital to buy Ethereum. So similar idea, they convert market capital into crypto. But here's what makes BitMine different. They actually stake their Ethereum. So what does that mean? That means they lock it on the network and they would earn that yield. Right now, they have over 3.3 million Ethereum staked, generating hundreds of millions of dollars per year. In other words, BitMine has built a cash flow engine that is, I would say, like a compounding loop. So if we zoom out, like both companies, MicroStrategy, this is MSTR price. So MicroStrategy and BitMine, they are doing something similar. So they are turning crypto into a balance sheet strategy. Like before that, people bought crypto individually. Right now, companies are accumulating at scale using financial engineering, capital markets, and yield strategies. If this continues, and if we go back to how much MicroStrategy is putting Bitcoin on the balance sheet, you can see just focus on the orange line right here, just like keep going up. another billions of dollars of purchase for Bitcoin. Like if this trend continues, that means there will be less circulating supply for Bitcoin and more locked assets for Ethereum, because like BitMine is basically doing the same thing, and there will be more institutional control. That would affect, of course, the price dynamics in the long run. Of course, it's not being reflected in a bear market like we are in right now, and there will be lower volatility in the long run, and market structure would change as well. So the bottom line is, MicroStrategy is using STLC to raise billions to buy Bitcoin. BitMine is using equity and staking to accumulate Ethereum. Two different approaches, same outcome. Like they are doing relentless buying, relentless accumulation. And the real story is not just that they are buying, is how they are funding it. Because once you build a system that can keep buying, the question is no longer about like, will they stop? The question is about like, how much can they actually own? And some say that MicroStrategy will eventually get to 1 million BTC on the balance sheet in 2026, so as soon as 2026. Let me know if you think that is possible at all. Anyway, so we will take a short break from here. When we come back, we are diving into one of the biggest tech companies in the world, being Apple, and there's a CEO shake-up. It could be the end of a new era. So the end of an old era and entering into a new dynamic. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. So let's now start with one of the biggest leadership changes in tech. After more than a decade at the top, Tim Cook is officially stepping down as CEO of Apple, and this marks the end of one of the most important runs in corporate history. So here's the headline. Tim Cook will step down as CEO on 1st of September. Taking over the role is this gentleman over here. So John Turners, the Apple's Senior Vice President of Hardware Engineering. Now, Tim Cook is not leaving completely though. Like he will stay on as executive chairman, and John Turners will join Apple's board. So this is a transition, not a sudden exit. And this is, of course, a big moment for Apple because Tim Cook didn't just run Apple. I would say he transformed it when he took over back in 2011, right after Steve Jobs passed away. There was real uncertainty of the company. Like a lot of people thought like no one can replace Steve Jobs. But what Tim Cook did was very different. Like he didn't try to be Steve Jobs. He built something else instead. So under Tim Cook, Apple became a multi-trillion dollars asset company. So right now, if we hop onto the top assets by market cap, it's actually sitting at number 5. So almost $4 trillion, and at some point it was worth the most expensive company in the whole world. And revenue more than quadruple under Tim Cook. Services became $100 billion business, and he turned Apple into a machine, not just a product company, but I would say an entire ecosystem. Now, here's something people often forget. Like Tim Cook was not hired to be a visionary. He was hired to fix operations. Before becoming CEO, he cleaned up Apple's supply chain, reduced inefficiencies, built one of the strongest manufacturing systems in the world. And over time, that became Apple's advantage. While others struggled with scale, Apple actually executed. And let's be like balanced. There are, of course, misses when it comes to Apple. Like the biggest one recently is the Vision Pro headset. It was very expensive, it didn't gain mass adoption, and it showed that Apple doesn't always hit the next big platform perfectly. But overall, I would say the track record is still looking very strong. Now, let's talk about the new CEO, this gentleman here. So, John Turners is not just an outsider. He has been in Apple for over 20 years. He is an engineer and he has been deeply involved in iPhone development, Mac products, AirPods, and Apple Watch. Basically, most of the hardware you use today. And this choice tells you something very important. Like Apple is not going for disruption, it's going for continuity. So John Turner's, I would say he represents engineering focus, product execution, and long-term internal culture. He's not coming to reinvent Apple, he's coming to continue it. So under John Turner's Apple launched multiple iPhone generations, expanded the Mac lineup, and pushed wearables further into health tech. So, this is someone thinking long term about products. Now, here's the real question though. Like, investors are asking what happens next. Because Apple today is very different from Apple back in 2011. Like, back then, Tim Cook, he was trying to prove that, okay, Apple can still exist after Steve Jobs. Like today, Apple is one of the most dominant companies in the whole world. So the challenge is no longer survival, it's actually growth. There are a few areas to watch. So first is AI integration across devices. I mean, I'm using MacBook, I'm using iPhone every single day, of course, but I have to say the AI integration is still sucks for Apple. And then second areas we need to watch is service expansion, or third area is like new hardware categories and health technology. So Tim Cook was very disciplined. He very operational and very consistent as the CEO. The question now is, will the next CEO be more aggressive or stay on the same path? From a market standpoint, this transition was already expected, so it's not like it's not like out of the blue. It's not a shock, but it still matters because Apple is one of the most important companies in the world. Any shift at the top can ripple across tech markets, can ripple to supply chains and global equities, and that's what the market will be watching next. All right, so I do want to shift gears a little bit, and I want to dive into a country in Europe. So let's talk about the UK. And there's something just passed in the UK. There is a smoking ban for people born after 2008. I know it sounds very ridiculous, and this is very controversial, and a lot of people are talking about this topic because this is not just about smoking. This is about freedom, it's about control and where governments draw that line. What just happened is that this new law, like the UK just approved a new law, and here's the key rule. If you were born after 1st of January 2009, you will never be legally allowed to buy cigarettes. So not at the age of 18, not at 30, but forever. You're banned forever. This is a lifetime ban based purely on your birth year. So the idea is simple, is to create a smoke-free generation. The UK government is calling this like it's a historical, very definitely very historical. So historic public health move. They are saying like smoking is one of the biggest causes for preventable death. I mean, I agree, of course. Like it puts pressure on the healthcare system, and stopping people from starting early saves lives long term. And to be fair, that part is true. Like smoking does cause serious health problems. But here's the part that hits me. This is not just about health anymore. It is about choice. Because now we're not talking about educating people, discouraging behavior, or taxing cigarettes. We are talking about banning an entire group of people for life based on what they were born, when they were born. So here's a real issue. Like, at what point does public health become government control? Because think about it. If the government can say, like, you can never buy cigarettes, what else can they say in the future? This law expands restrictions beyond just cigarettes. So vaping is now being restricted too. No vaping in cars with children, near schools, in playgrounds, or outside hospitals. So the control is expanding across the entire category. But now, let me be clear once again. I'm not promoting smoking. That is not the point. The point is, like, this is about freedom of choice because once you accept, the government can decide what you're allowed to do with your own body, and that line can move. And historically speaking, it always has, it always does. Now, if we zoom out, because like this isn't happening in isolation, we already seen people getting into legal trouble for speech online in the UK, more regulation across daily life, and now lifestyle bans like this. At the same time, the UK is falling apart, falling behind economically. So here's some figures we could look at. So as of April 2026, the Taiwan stock market has officially surpassed the UK. So here's the figure. Let me zoom closer so you guys don't have to squint. So Taiwan is worth $4.14 trillion US dollar, while the UK is only worth $4.09 trillion dollars. So in other words, like Taiwan is now the seventh largest market in the whole world, and the UK just got pushed down. Well, the reason why this matters because Taiwan's growth is coming from technology. It's coming from semiconductors and AI, led by companies like at TSMC, which alone makes up over 40% of Taiwan's market. So while Taiwan is pushing forward in innovations, pushing forward in tech leadership and AI infrastructure, UK is choosing to make headlines about restriction, about jailing people for saying some what they think online, about restriction and control policy. So you have two models right now. So on one hand, we have Taiwan building, scaling, and leading in technology. The other one, like the UK, is increasingly focused on regulating behavior, managing risk, and tightening control. That is certainly a risk for the UK, like because markets don't just follow money, they follow freedom, they follow innovation and opportunity. If people feel restricted, if business feels over-regulated, then of course capital would move elsewhere. And that is a very uncomfortable truth. Like, is the UK protecting its people or slowly limiting them? And more importantly, is that trade-off worth it? Like this smoking ban might look very small on first, but like it sets a precedent. Like a government deciding not just what is dangerous, but what is allowed. And once that framework is in place, it doesn't usually just stop at one issue. Like some people would say, okay, why, Jamie, you are making such a strong opinion about the UK? Well, I do take this personally because, well, actually, I was living in the UK for 7 years. So I do feel quite disappointed and seeing where UK is heading towards this direction. And luckily, I came back to my beloved city in Hong Kong. But the bottom line is, the UK just passed a law that bans an entire generation from ever buying cigarettes. The goal that they claim is public health, but the method raises some very serious questions about freedom. At the same time, the UK is also losing ground economically speaking, while markets like Taiwan are accelerating through tech and AI. So, this is not just a health story, this is a direction story. And the real question is, where does that lead next for the UK? All right, so we'll take a short break from here. When we come back, we're actually diving into more UK story because some of the smarter British people are going to other countries because other countries are treating them better with less stupid policy like this, maybe more control of their own money. So we are looking into that, and we are also talking about UK versus Dubai. So if you're intrigued, make sure don't go away after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxanne TV, and thanks for sticking around with us. Before we took that break, we talked about how the UK is lagging behind many other countries. And guess what? Looks like many British people are smarter than the country and know the situation of the UK, so they move to another one. For years, there was a very clear trade. If you are wealthy, if you are a founder, if you worked in finance or tech, you left the UK and you moved to other countries, maybe Dubai. The reason is simple, like Dubai offers much lower taxes, better lifestyle, basically more money in your pocket. But now something is changing. And it's not just about money anymore, it's also about risk. So what happened is like if we take a look at the situation here, around 240,000 British citizens live in the UAE. But since the Middle East conflict started, roughly 1 in 8 people have already left. So that's about 30,000 people. And this didn't happen slowly, this happened fast. So let me be clear. Dubai still didn't lose its appeal overnight. So the tax benefits are very much still there. Zero income tax, zero capital gains tax. So that, of course, hasn't changed. But what changed is stability. For years, Dubai was selling this big idea like you get the opportunity of the Middle East without the instability. But right now, missiles intercepted over Gulf cities, flights getting disrupted, even incidents near major airports. All of a sudden, for Dubai, that promise is still being questioned. Is being questioned. So this is not just a headline. Schools being shut down, kids move to remote learning, families sending children back to Europe. And when that happens, people start asking, like, is this where I want to stay in the long run? Is Dubai the place for me to stay? Now, here's where it gets interesting. So, the UK government is trying to turn this around into their own advantage. So, Rachel Reeves is now pitching Britain as the safe harbor economy. So, what is saying is that, okay, come back, it's safer here, come back to your home country. They are trying to attract people back with business incentives, with listing benefits and lower corporate tax compared to other G7 countries. So, trying to rebuild what they lost over the past few years. But here's the bigger problem. Like, tax is still the main issue, if you ask me. Like, we're talking about UK tax versus Dubai tax. That is a main issue. So, if we compare that, what Dubai offer is 0% income tax, 0% capital gains tax. So what UK offer, on the other hand, is UK has up to 45% income tax. And when it comes to capital gain tax, is up to 24%. That is, of course, not a small difference. That is a massive gap. Here's the key point. So people are leaving Dubai, but they are not necessarily going back to the UK. Instead, they are going to other places like Switzerland, Spain, Portugal, even places in Bali or Thailand, Singapore, Hong Kong. So, what these people are opting for, they are essentially opting for lifestyle, cost, flexibility, or lower tax countries. And this is I would say, a bigger trend. So, wealthy individuals today, they are not tied to one country. They move around, they adjust, they hedge their positions. If one place becomes too risky, they will go somewhere else. Because this is not just about Dubai or the UK. This is about global capital movement, where people live, where companies build, where money flows. That's a lot of shifting. And let's be honest, the UK has been losing talent for years. Thousands of high growth founders have already left. Many of them, guess where they went? They actually went to Dubai. And others went to US, and some went to other European countries. And this war might slow that trend, but it probably won't reverse it. And talent won't just go back to the UK. At the end of the day, tax matters, but it's not the only thing. Like, people also care about safety, they care about stability, lifestyle, and education for their kids. And right now, that balance is shifting. So we certainly don't want kids in the early age, 3 years old, learning about LGBT, forcing to learn take lessons and forcing to maybe shift their genders. That's what UK is suggesting, and some of my friends are going to Dubai for that reason, because at least there's some sanity in the country. So people move to Dubai maybe for money. Now some are leaving because of risk, geopolitical risk. The UK is trying to bring them back, but high taxes are still a major barrier. So instead of coming back home, many are simply moving to somewhere else, and that tells you something important. In today's world, wealth doesn't stay in one place; it moves, and it moves fast. Let me know in the live chat if you think UK, there's any chance for UK to come back, or it's more like a done deal. All right, so let's shift gears a little bit, and I do want to talk about this ETF that I find it very, very interesting. So this is really a brand new ETF, literally just launched last week. And this is the first rare earth ETF that completely excludes China. And when you understand how the rare earth industry works, you will immediately see why this is such a big deal. So what happened is that this brand new ETF just came to the market. Actually, okay, switch to here. So this brand new ETF, the ticker symbol is LEXC. The strategy is very simple: invest in rare earth companies, but exclude China entirely. Now, on the surface, that may sound like just another ETF, but in reality, this is a very aggressive geopolitical bet because China dominates the entire industry. So, if we break this down in a simple way, if you guys are interested in knowing more about rare earth, this is what it looks like. Basically, like some looks like some mud, but like this mud is very, very, very valuable, and right now it's dominated by China. And what rare earths are being used? They are being used in defense. So satellites, they're being used in technology. So AI, like all the AI chips, semiconductors, they need those rare earth. And also energy sector. So we're talking about batteries, solar panels. Like solar panels is again, China dominates that market too. Basically, in other words, so just looking at this table, you get the idea that our modern economy depends on rare earth. Now, here's the key point. China controls around 60% of global rare earth mining, but more importantly, it controls over 80% of processing and magnet production. And when it comes to heavy rare earths, the most critical part, like China is almost the only country that can process them at scale. So this is not just about mining. China controls the entire value chain. And this is why I personally think this ETF is really interesting, and it did caught my attention. So last year, China restricted rare earth exports. We all know that Donald Trump was extremely mad, and that created real pressure on the US and its allies. And this is what people mean when they say supply chain vulnerability. If one country controls a critical resource, they can influence global markets very quickly. And that's exactly what trigger this response. So what happens when the US realize it is behind? Of course, like US can spend a lot of money because US has nothing but only money. They can print money. They are the only country that are allowed to do so. And not just small amount. We are talking about serious capital. So a key example, this is a gem that I gave out few months ago. Actually, like half a year ago, we talked about that on Roxham TV. So also in Gem and Crypto. So a key example is MP Material. This is a company I'm really bullish on. Not financial advice. This is just financial opinion. Okay. So this is currently the only major rare earth mining operation in the US. The US government stepped in and did several things, and this makes me why I think this is so valuable, so bullish, and I actually have some MP materials in my portfolio. So take a look at what the US government did. Okay, so some say MP material is being backed by the US government 100%, but like uh, the question that you might have in mind is like, where does that claim come from? Why people are saying that statement? Well, because like first of all, it invested $400 million in the preferred stock to become the largest shareholder. It also provided $150 million loan to expand processing capabilities. And more importantly, and this is why I'm so bullish on MP material in the long run, it actually set a guaranteed price floor. So the government established a 10-year price floor of $110 per kg, nearly double the market price at the time of the deal to protect the company from Chinese market manipulation. So in other words, this MP material is directly backed by the US government. So is entire US government. So even if global price collapse, the government will still step in and buy at a minimum price. So the company is effectively protected from being pushed out of the market. So if we we talked about that half a year ago. I talked about buying the dips when it was at $50. I have been DCA a little bit, and the past 6 months is down, but past 1 month, I mean, it did quite generous. It's 12%. So 23% return past month. I didn't catch the dip, to be fair, at $45, but I've been buying like around 50 something to $60. So this is no longer just a business story. This is a national security we're talking about. So that's what makes this ETF so interesting. And that's why I'm spending so much time here on Roxham TV breaking this down for you guys. Like, it's about building a domestic supply chain for critical materials. And it's about reducing dependence on China. That's the context behind this ETF. And this ETF is essentially making a call bet that Western countries will successfully build their own rare earth ecosystem, and that government will support the process financially. So it is not just a market trend; it is a policy-driven trend. And if we break down the basis here, as I mentioned, is really new because it just launched literally last week. So on 14th of April, assets under management are still very small. The expense ratio is around 0.65%, which is relatively high, but expected for a niche strategy. And here's the important part, like, this is a pure play ETF. Every company inside has direct exposure to rare earths, so there is no dilution with unrelated business. And we break down the graphically, like a geographic of this index. The first one, but like most of the companies are based in Australia. The second one is US, and the third one is Canada. So Australia actually has a large share of rare earth resources, which is why it plays such a big role here. And if we break down to this ETF, like again, like the largest holding they have is MP Material. It carry 20% in the portfolio, carry 20% in its weight. So I'll say the largest positions include the Australian rare earth producers, which make up a significant portion, MP Material, of course, and other North American and Australian companies involved in mining and processing. So overall, this is a portfolio focused on Western supply chains. Now, here's something important. Like, this ETF is not just based on market cap. It also used an intensity score. In simple terms, it looks at how much of a company's business actually comes from rare earths. So a company with 90% of its revenue from rare earths will get a higher weight than a larger company with only 10% exposure. And this keeps the ETF focused on its core theme, which is rare earth. But there's still risk, like there are also limits built in. For example, some risk management that they do, you can see none of that companies would exceed around like 20%, like even MP Materials, it's just like 20.5%. And what it does is that it helps prevent the ETF from becoming too dependent on just one name alone. So there's a real bet here. Like, of course, this channel is never financial advice. I'm not asking my viewers to, ape into this ETF, REXE immediately. But for investors who bought it, and essentially what you guys are buying is that you're betting on three things. But first of all, that Western countries will invest heavily to build capacity. Second is that supply chains will diversify away from China. And third is that government support will create long-term winners. But let's be realistic, like China still has its major advantages. They can scale very fast. They have the infrastructure, cost efficiency, and technical expertise in processing. So this is not something that can change overnight. This is a long-term transition that could take years. Like even if you don't invest in this ETF, this still matters because rare earths would impact, as I mentioned, EV, AI hardware, energy sector, and defense system, basically everything and in our modern economy. And when supply chains shift, costs usually increase before they stabilize, and that feeds into inflation and broader market dynamics. So the bottom line is this ETF is very small, very new, but what it represents is a lot more significant. It's essentially a bet on rebuilding critical supply chains outside of China. It's a bet on government-backed industrial strategy, and it's a signal that competition over resource is only getting more intense. So the real question going forward is quite simple. Can the rest of the world catch up? Because again, this ETF is interesting because it excludes the main player in the field, being China. Or will China maintain its dominance in this space? Because this is not just about investing, it's also about control of the future supply chain. All right, so that's essentially mark the end of our live show today. But before you go, make sure to give us a follow on Twitter or on X. So my own Twitter is gemdreamcrypto_io. And make sure to give Roxham TV on X a follow as well because we have valuable insights, valuable information and news coming out on an hourly basis. So point being, there's so much content you probably don't want to miss out. So make sure to give us a follow. Make sure to subscribe on YouTube if you haven't already. As always, my live shows here on Roxham TV is Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So being Gemframe Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching and see you guys in tomorrow's show.